Andreas, I want to congratulate you on this absolutely phenomenal headline, which is the heart of the matter for every single viewer and every single listener of this program. To fight inflation, hunt for income. It's brilliant. And what it means is we have to completely reset how we deal with equities and the stock market. How do we fight and search for income in this time of low inflation?
You're absolutely right. It's not rocket science, though. It's really been the mantra for the last 10 years, at least since the great financial crisis hit us. Look for companies that have a proven ability to deliver dividend growth. I think one of the reasons why the Allianz stock, the company that owns Allianz Global Investors, has done so well in recent years is precisely that. Focus on increasing the dividend. The focus, though, needs to be on beating inflation, and that means to have real returns, and that's increasingly difficult. And that's, I think, why quite a lot of people, in addition to looking for those pullbacks, like we saw in December, pullbacks in emerging markets. The previous strategist from Columbia Threadneedle said, when everybody sold emerging markets, that was time to go in. So I think investors are waiting for that. But I think we're also seeing an increasing focus on non-public market activity by end investors, be that angel investing, early stage private equity, and so on and so forth, to try to beat over the longer term the sort of financial repression scenario that we've been in for 10 years plus.
Do we have a risk here that within all this, in the big picture today of the jobs day and the Bank of England meeting, the Fed meeting, and all the 60,000 feet stuff we talk about each and every day, do we have a risk here of a combination? If we're so desperate for income, are we going to enter an era where everything merges in together into almost a 19th century oligopolistic structure?
It's definitely a risk, and this is where regulators obviously need to step in. But in terms of stock market activity, in terms of asset class activity, we've seen increased correlations all the time. That's all pointing towards that same direction. Massive yield compression everywhere. Long-dated assets not really paying you the premium, the liquidity and term premium that you need. And ultimately, as we see, as you mentioned quite rightly, enormous concentration in many industries, including, of course, my own.